Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app. So here's the latest. The dollar weaker as investors reprice bets on a second Trump presidency. Juckes of Soc Gen writing, a Trump clean sweep and a Harris win without a clean sweep remains the two most likely outcomes in our view. And equally likely, these are the most bullish and most bearish outcomes for the dollar, respectively. Kit joins us now for more. So Kit, I've known you long enough to say unhelpful. What are you telling people to do?
I was thinking about it. It's a bit like the sort of the Brexit story in terms of whether we're going to have a hard Brexit or not back in 2020, when you really have to be careful about where to go. I think we have to be sort of conscious of the fact that at the moment what we're doing is seeing bets get taken off. The market got excited about the possibility of a Trump victory, and the Treasury market sold off. The dollar rallied. We're giving up back some of that. I think in terms of the places where the market has skew in its pricing, I think if Trump doesn't win, or if by some chance he didn't get a clean sweep, because that's very important as well, then currencies like the Australian dollar, where they decided not to cut rates this morning and where they don't look like cutting rates this year, that looks like an undervalued currency on any scenario other than kind of the most aggressive Trumpian one in terms of fiscal expansion in the United States, tariffs on China, and maybe even only a modest Chinese policy response to that. So the Australian dollar might be the outlier. But if you said that the yen is going to follow where bond yields are going to go almost regardless, then frankly, Trump wins with a clean sweep, dollar yen might be at 160, and Trump doesn't, and Harris wins without a clean sweep, dollar yen might be breaking towards 140. So it's just a massive gamble that's very hard for people to cope with, and they have to hold tight until we see if we're going to get a result tomorrow morning.
But Kit, long term, if it is a Trump win or potentially this clean sweep scenario with Congress going red as well, Trump has talked about the fact that he wants a weaker dollar. How do you be able to measure both of these basically conflicting results?
Look, the dollar's strong because the United States has had exceptional fiscal policy, because the U.S. has issued a lot of bonds and bond yields have been higher, and the strength of the fiscal stance in the U.S. compared to everything we've done in Europe is that it has helped the economy outgrow the rest of the world spectacularly. Trump wants more growth. He wants to put tariffs in place to get more people into manufacturing jobs in the United States. At a starting point of pretty low unemployment already. He can't have that much cake and eat it in terms of an economy that's going to be even stronger, with fiscal policy continuing to be accommodative and have a weak currency, because in the end the biggest threat to Trump is going to be inflation on what we've heard so far. So he'd have to change some of his policies if he wanted a weaker dollar. We'll see how it plays out. But you get the currency your policies give you, not the currencies you wanted.
Kit, when you look at why the financial markets changed, was it because of the polling out of Iowa, or is it because they're basically a little bit nervous that they got too over their skis when it comes to the Trump trade?
I think that if you looked at the dollar index and you plotted it against the betting odds from real clear politics and how they were going in favor of Trump, they moved very closely together. So the betting odds have moved back in line with the opinion polls in the last week. Less than a week, really. And Iowa played a part of that, and I think that's certainly seen people taking not just bets off perhaps in the betting space, but taking some of those trades off. And so when we look today as if we're closer to a market that genuinely doesn't know what's going to happen. And maybe that's the right place for it to be.
Which raises this question, Kit, how violent could the reaction be in markets after we get some sort of result, given that everyone's going to be racing to it, no one really had an edge? Yesterday, Mike Wilson of Morgan Stanley was talking about how he sees a clearing event coming after we get the results from this, and the clearing event could last a month. How violent of a clearing event could it be if we get a decisive result one way or another in the base cases that you laid out?
No, if you just tracked from the polls, so from Harris entering the polls and then Trump sort of coming back, and then where we are now, we're sort of 107, 101 in the dollar index. I imagine that a sudden sort of, when you're not sure, you get through those levels. That seems to me like the most likely outcome. So it's pretty violent. Again, if I look at dollar yen in terms of that, the violence of a dollar yen move depends on how much Treasury yields can move. But we've had a big sell-off at the long end of the Treasury market on concerns about more accommodative fiscal policy, increased bond supply, and some inflation worries. If you had a scenario where those melt away, the Treasury market's pretty bearish at the moment in terms of sentiment. So a snapback rally there, what that could do to the yen is very striking. So right the way across the piece, we're not, I don't think we can avoid having a pretty violent reaction. And history says, we sometimes overshoot and then come back and settle down and decide that we'll have a look. Because there'll be so many more questions. I mean, we have to sort of put in sort of minor adjustments in the sense of, whether someone has a clean sweep or not is very important. How it looks, and then we're going to work out whether either president can get what they want through Congress, irrespective of what that looks like. So there'll be lots more questions, but I think the initial reaction is likely to be pretty big, really, just because we're caught where we are.
Kit, are you watching the election from Mexico City?
I am not watching the election from Mexico City. No, that would be too exciting. But yes, you look at the impact on the yen, on the Australian dollar, on the Mexican peso, on all of Latin America, really. In fact, for once, Europe is likely to be less affected, I think, than the rest of the world. I mean, that doesn't mean it doesn't have an impact here, but the big story is Asia and Latin America.
Interesting. Kit, appreciate it, sir. Kit Juckes of Soc Gen. We begin this hour with stocks on hold on the last day of voting in America. Dawson of NewEdge writes the following. Given how tight polls and odds are, we see the election as a source of near-term volatility, regardless of the result. Each side has boogeymen that could spook markets. Cameron joins us now to talk about those men. Cameron, who are those men?
Well, those men certainly are things like higher deficits, higher corporate taxes, tariffs, and immigration. And I think Anne-Marie's point was really important, is that if we think of the tariffs line of things, it doesn't necessarily matter about the makeup of Congress, that we could see them if Trump is elected, which is certainly some of the questions that you've seen raised by the bond market and considering potentially stickier inflation. So we think regardless of who wins tonight or whenever we get those results, it effectively is going to be a surprise because those polls are so very tight, which means that it could be a volatility-inducing event. I think it's important to note, though, that markets aren't necessarily primed for volatility to continue. You've seen a huge buying of put options for the VIX, effectively people betting on volatility collapsing post the election. So again, this could simply be a surprise, and it could cause that higher volatility, given the fact that people aren't necessarily positioned for it.
I want to pick up on that point because you see this across a range of different volatility metrics. Basically, people expect volatility price swings to really peak tomorrow and then absolutely fade off as we get results and go back to some sort of status quo. From your vantage point, how much are you looking to actually take advantage of something that could be more significant? How offsides would this market be? And what would you do with that?
We always try to see volatility as opportunity, and I'd raise the question of if we would be seeing this volatility even if this wasn't election day. If you look at things like S&P 500 momentum and breadth, they've all been deteriorating over the last month. You've also seen a deterioration in forward earnings estimates. You've seen estimates for 4Q as well as 2025 get cut and trimmed. So I would raise the question of if we could have this volatility, even if this was not election day, simply because you have a lot of digestion of the strong gains that we've had year to date, and kind of putting some of the seasonality aside, given that deterioration in breadth and momentum, that just sets you up for a little bit more churn.
At this point, Cameron, you have to understand, I have to understand, and I don't understand exactly how much we've already priced in some of these trades, what these trades actually are. I'm thinking in particular in the bond market. People have been wondering, you strip out the political influence, what does the 10-year yield look like? Do you have a sense of that?
Well, we do know that there has been a relationship, whether it's correlation, causation is up for debate, between Trump's odds of winning and the 10-year Treasury yield over the last 3 months or so. That certainly broke down at the end of last week, where Trump's betting odds started to fall and you still saw the 10-year Treasury yield moving higher. We think the source of that 10-year Treasury yield moving higher really comes down to the bond market digesting the fact that you have a relatively resilient economy that is supported by higher deficit spending at the same time as you have a Fed that's talking about potentially hundreds of basis points of cuts to get to their idea of neutral, which could have the potential of effectively throwing lighter fluid on some of this tightness within the economy, the fact that you still have overall easy financial conditions as well. And that seems to be the reason why you're seeing these bond yields move higher, not necessarily the election or just the election.
The why is important, Cameron. The why is important because I think it dictates how to trade equities, to some extent at least. Would you say yields have been rising then for good reasons and not bad? And is it a reason to stay long equity markets?
I think the answer to that is in high yield spreads. If yields were rising for bad reasons, that the Fed was tightening policy and it would eventually result in much weaker growth, you would see high yield spreads widening out. But they continue to remain very contained and actually making new year-to-date lows, which says to us this is not a market that is necessarily in fear of growth. It's not priced for a growth slowdown. Now, you could see that as a risk going into 2025 if you start to see a deterioration in economic fundamentals, but effectively the credit market is telling you that yields are rising because growth is resilient. So watch those high yield spreads very closely.
Would you expect it to remain that way even if we got a sweep from the GOP in the next 24 hours?
I don't necessarily know if any of the policies that would be enacted by a GOP sweep would necessarily affect growth in 2025. Let's put tariffs and potentially immigration to a side, because that is certainly something we could see without a GOP sweep. But the question and the risk for a GOP sweep really is something that's contemplated later in 25 and into 26, where we will be negotiating those $4 trillion of tax cuts, potentially adding a lot to the deficit, which is certainly something that the bond markets might push back on, but that's not necessarily something that we deal with in the next couple of months.
Cameron, a couple of months ago, people who came on this show talked a lot about how this could be a transformative event, how this could mark the difference in an economic cycle with respect to inflation, with respect to growth. As we've gotten closer to the event, people have revised that view. Suddenly people are saying, actually, we just need to get past it, and whatever the result, things will keep on going on the way they were before. Where do you fall on that?
The best news that we always try to bring clients back to is that if you look historically, that the S&P 500, regardless of the power balance within DC, has been able to do what it does despite of or in spite of what goes on in DC. And that's really good news, which just means that overall corporate earnings have been able to operate in times regardless of uncertainty and pressures of what's going on within policy. And it's something that we always try to remind clients of, just so that the way that they don't respond too emotionally to what is, for many people, a very emotional election day.
Cameron, we know the markets like certainty. What if it is a contested election? What's going to be the impact?
Certainly that would be potentially a source of volatility. It's not necessarily volatility that would last for a long time. So it gets back to Jonathan's first question of, if you do see volatility, is it buyable? We think the answer is yes, that as you start to digest some of these deteriorations in breadth and momentum that could be happening regardless of the election, you get the narrative of uncertainty behind it, then you set up for effectively a great buying opportunity into year end with that potential Santa Claus rally and year end and chase. So a source of volatility, not necessarily a source of investment decision.
A good framework for thinking about this market into year end and beyond. Cameron, thank you. Cameron Dawson there of NewEdge Wealth. Among big donors in the final stages of the campaign, one wealthy individual supporting Harris is Mark Cuban, the minority owner of the Dallas Mavericks, and I'm pleased to say that Mark joins us now. Mark, welcome to the program. We spoke to a Trump campaign advisor a little bit early this morning, and I want to start with you in a similar way that I started with him, which is basically I'm waking up this morning, I'm a swing state voter, I'm in Pennsylvania state, and I still haven't decided who I'm going to vote for, and I'm thinking back to how Harris talked about in 2019 that she wanted to ban fracking. I understand she's changed her mind, but I'm worried that she's a bit of a shapeshifter. She gets back into power and she'll change her mind again. How do you settle those concerns?
The world has changed since 2019. She's open-minded. She's talked openly about the fact that she wants to give dissenting opinions a place at the table with her. She's not dogmatic. That's how you explain it. And she's looking to put together the best policy. She said in 2020 that she supported fracking. So I think that's a non-issue. And in terms of, is she just an extension of Biden? Just look at Biden's budget proposal versus what Kamala Harris has actually proposed. Biden wanted much higher taxes. Kamala Harris came in at 28% for tax rate for cap gains and 28% for corporation, and did not say a word and will not say a word about unrealized capital gains. And so I think she's completely different. She's not a shapeshifter in the least bit.
Well, that individual we were speaking to, Scott Bessent, this key economic policy advisor to the Trump campaign, says that Harris, what he hears from a lot of Wall Street journals, that she would be moderated by a Republican Senate. And that's why Wall Street would be willing to vote for her, because of that moderating effect that she would get from a red Senate. Is there any truth to that?
Yeah, of course. I mean, balance is not a bad thing necessarily. I'm not opposed to a divided Congress. But the bottom line is, what will Kamala Harris do? And I think she's better for the economy in so many ways. There's 335 million people in this country. 4 million make $400,000 or more. The other 330 million make less. And she's been very specific that if you make $400,000 or less, your taxes aren't going up. In fact, for 100 million people, they're going down. The other big expense that every household is fearful of is healthcare expenses. Donald Trump has said he has a concept of a plan. Kamala Harris has been very specific on the pharmaceutical side, saying she's going after the pharmacy benefit managers, the middlemen, and she'll introduce transparency. I know from my own personal experiences with cost-plus drugs, that'll lead to a 20, 30% or more deduction in the cost of medications for households and businesses. And then you've got tariffs. As Michael, I think it was, said earlier, tariffs are a bad idea. I mean,
well, if they're so bad, then why did Biden and Kamala Harris keep them? They keep the Trump era tax.
Well, let's talk about that, right? Because that's not completely accurate. First, look at the EU. Biden signed a deal saying that there would be no tariffs between the two, EU and the United States, for the next 5 years. So those tariffs are gone. And then you look at what Trump tried to introduce. He had 4 years to try to implement tariffs that worked, and he got his butt kicked by China. The retaliatory tariffs almost destroyed the soybean and the farming industry, and he had to pay out $20 million. But as it applies to households, right, he's talking about a 60% across the board tariffs for Chinese imports. China makes just about every Christmas present that we buy for our kids. So families would be looking at a 60% or more increase in what they'd spend on Christmas, and the downstream impact of that would be significant to small and large businesses.
Mark, let's talk about something you've been very vocal on. This is regulation. You've said that you don't think Harris should keep Lina Khan, the head of the FTC, on. And Alexandria Ocasio-Cortez, the congresswoman from New York, went to Twitter and she said billionaires like you, Mark, are trying to play footsie with the ticket. If anyone goes near Lina Khan, there will be, quote, an out-and-out brawl. Where is Harris when it comes to things like the FTC?
I don't know. I haven't talked about personnel with her or her team. I have no intention about talking about personnel. I was asked a question about what I thought about the FTC, and I thought that, the possibility of breaking up the big technology companies would be a negative, because I think, winning the AI battle for the United States is paramount from a military and an economic perspective. So I voiced my opinion, but I'm not involved in those conversations at all.
But it really raises this ultimate question, which is what policies will she follow? She's been engaging with AOC quite a bit in terms of the campaign trail. And there's a real question of how much there will be an effort to cater to the further left sides of the Democratic wing versus the sort of centrist appeal that she's been trying to have. How much are you actually getting confidence that she's going to have business executives in cabinet positions, in top areas where she really is listening to what they have to say?
I talk to her campaign almost every day. I'm 100% certain. I'm not just confident. I'm certain that that's what they're going to do. I've been on the trail with Doug Emhoff, who, as part of his presentation, talks about what a capitalist she is. She's talked about, wanting to create 25 million new businesses. That's not a reflection of anything far left. She, one of the first things she did was introduce a tax deduction or increase the tax deduction for startup costs to $50,000. That's very important. She recognizes that of the 33 million companies in this country, 99% are passed through, 99% are run by people making $400K or less. Those small businesses are what drive the economy. They create most of the new jobs every single year. So she's focused on an opportunity economy. I don't think she can be any more clear.
Mark, do you think that this campaign for Kamala Harris could have done more to reach out to the male voter? This seems to be an election that is unique in just how bifurcated the male and the female vote really has been. There were some questions around Joe Rogan and how to appeal to the male vote and how to really bring the genders together. What's your take on this campaign's approach to that?
I think it was very data-driven. I mean, women have a high propensity of voting, and with reproductive rights and other issues that were geared towards women, I think she did a great job of connecting to them. Maybe she didn't do everything she could have with men, but that's okay because she went to the people who are going to vote more. You go, as a business person, you go to the people you have the best opportunity to sell to. Who's going to buy your product? Who's going to vote for you in this particular case? And the fact that she's only been in the race 14 weeks and she's caught up completely and now I believe passed her and will win today, I think she's done the exact right thing.
Mark, speaking of business and product, there's a famous quote from Michael Jordan, which I'm sure you know well. Republicans buy sneakers too. It raises a question about you, and I wanted to ask you about this. For a man who's got a line of businesses, why was this important to you to put your name and reputation on the line and really get deep into politics when ultimately Republicans buy sneakers too?
So I'm not going to get deep into politics, but I think this is a close election for a reason. And I think Kamala Harris will be the best president and is a better choice than Donald Trump. It's that simple. I mean, I love this country. I'm in this position because of everything this country has given me. I'm blessed. And I thought, I truly believe that she will be the better president for the United States of America. And that's the only reason I'm doing this.
Well, thank you for sharing your time with us this morning. We appreciate it, Mark, and hopefully we can catch up again soon. Mark Cuban there on the latest campaign effort from the Harris campaign.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.